National income. People in a given country normally engage in activities that involve production of goods and services. The government collects data on legal production activities to determine the national income of a country. National income therefore refers to the total value of goods and services produced legally in a country over a given period of time, usually. Introduction. A country's desire is to determine the value of legally produced goods and services in a given period of time. This will help in proper planning and fair allocation of resources to different sectors of the economy. Meaning of national income. National income refers to the total value of goods and services produced in a country over a given period of time, usually 1 year. It is the total income received by owners of factors of production in a given country in a given period of time. The following illustration shows the factors of production and their relevant rewards which constitute the national income. The circular flow of national income. Circular flow of income refers to the flow of money in the economy to and from the various sectors of an economy, such as households, farms, government, among others. The circular flow may include a two-sector economy. This involves the flow of income to and from households and farms. Households supply factors of production to the farms, who in turn use them to produce goods and services. The farms pay the households for the factors of production availed to them. The households use income received to buy the goods and services produced by the farms. The farms use the income received to buy more factors of production from the households. The following diagram illustrates circular flow of income in a two-sector economy. Four-sector economy. This involves the circulation of income in four sectors of an economy, which includes households, farms, government, and international trade. In this case, part of the demand of goods and services is satisfied by imports. The government receives taxes from farms and households, which in turn are used to buy goods and services from farms. Households keep part of their income as savings, which is borrowed by farms for investment. Farms produce goods and services, which they sell to households, government, where the rest is exported. The following diagram illustrates circular flow of income in a four-sector economy. Methods of measuring national income. There are three methods used to measure the national income, namely the income approach, the output approach, and the expenditure approach. Income approach. This approach involves all income summation of all rewards of all production in a given year. It excludes transfer payments and income earned by foreigners in the country. National income by this approach includes estimated incomes in the subsistence sector, incomes from formal and self-employment, undistributed profits of farms, income from government-owned business and properties, income earned by citizens abroad, and rent income earned from the use of land. Output approach. It involves summing up the total value of goods and services from all farms in every sector of the economy over a given period of time, usually 1 year. It includes final goods and services produced in all sectors of the economy. Products included in the output approach include value of goods still in the process of production, value of government, final output of goods and services, for example, security, education and medical care, and net output from outside the country, that is, exports less imports. Expenditure approach. This involves summing up all the expenses on goods and services used by consumers, the government, the purchase of capital goods by the firms over a specific period of time. It includes consumer expenditure on goods and services, expenditure by producers on fixed capital assets, that is, investment goods, government expenditure on goods and services, and net expenditure from abroad, that is, expenditure on exports less expenditure on imports. Problems in measuring national income. Depreciation. It is not easy to estimate the actual amount of depreciation of capital in a given year. Subsistence output. It is difficult to approximate the value of subsistence output because there is no exchange for them. Free or subsidized goods or services. This includes unpaid services, subsidized government services, among others. Illegal goods and services. Activities that are considered illegal, such as making illicit brew and selling of illegal drugs, are not included in the national income, although they involve some exchange of money. Price fluctuation. Prices of goods and services in the market keep on changing, making it difficult to estimate cost. Uses of national income statistics. Indicators of standard of living. High level of national income leads to high standards of living, while low level of incomes leads to low standards of living of citizens in a country. Comparing two or more countries. National income figures are commonly used to compare living standards of different countries. Government planning. These statistics provide information which is used in making economic policies, preparing annual budgets and development plans. Distribution of national income. They provide information on distribution of income, which helps the government to address income disparities. Factors influencing the level of national income. The following factors influence the level of national income in an economy. Size of working population. The higher the size of working population, the higher the national income.